The implications of another rate hike are pretty enormous in the wake of upheaval in the financial sector. We've seen some regional banks go down, 3 of them since the beginning of the year. They're also facing challenges to their balance sheets with previous rate hikes. So what should we expect moving forward, and is your money safe? We're going to call in an expert for that. Joining me now is Peter Morici. He is an emeritus professor of economics at the University of Maryland. Professor, thanks for joining us again.
Nice to be with you.
So let me ask you about the 10th interest rate hike in 14 months. That's kind of astounding to me.
It's really not that astounding when you consider how tough inflation is right now. You know, a lot of the newspapers say, well, you know, these are the biggest rate hikes in the last few decades. Over the last few decades, we haven't had inflation like this. But if you go back to the late 70s and early 80s, when inflation was above 10%, Paul Volcker took interest rates ultimately to 17 or 18%. That was necessary to break the back of it. What concerns me is they're quitting so soon. People have referenced the bank issue. The reality is the big banks are sound. They're okay. The smaller banks, people have to remember, if they have less than $250K in the bank, they're fine. Also, there are ways to open multiple accounts. If you're married, you can have a joint account, 2 single accounts, things like that, and scale it up. They're in trouble if they have, you know, a very large deposit. The Federal Reserve and the FDIC have been unwilling to step up and ensure deposits of greater than $250,000, when that is frankly quite possible to do.
How much worse was it in the late 70s and the early 80s? Because if Volcker raised things to more than triple what they are right now, it must have been, the inflation must have been off the charts. It must have been a terrible economy.
Well, the inflation was really quite bad. And just as we have to deal with the war in the Ukraine right now and the Saudis behaving as they did, they dealt with OPEC. The economy wasn't bad, but it wasn't great. Does it sound familiar?
Yes, it does.
And that's what we're about to get into, because the economy is slowing. So everybody's all, you know, hyperplectic about that. But at the same time, inflation is still around 5%. Now, in the 70s, Volcker's predecessors would lower interest rates at the first sign of trouble. And that's what the progressives in Congress are advocating. And frankly, some people on the right, among Republicans, the same. That's exactly what gave us inflation well above 10%, because lowering interest rates at the first sign of trouble, you know, indicates you're not willing to accept the fact that inflation's never been cracked without a recession. I mean, it's that simple. And to think you're going to have a soft landing is to say, I'm going to land a Piper Cub on the diagonal of a small tennis court, you know, three courts wide. It can theoretically be done, but you have to be Jimmy Stewart in a crop duster movie in 1938. And this economy is not a movie being shot on a backlot.
Sounds like it's going to take some Hollywood magic if that's going to happen. So in other words, it's not going to happen. Well, let me ask you this. I take your point about banking security, in that most of the country, the vast majority, should not be very concerned about bank failures, because most of us don't have more than $250,000 in the bank. But I did want to ask you, too, about GDP, because that growth came in a lot lower than we were expecting. And if we are to hit a recession, as you're saying, then we will see negative growth. So, you know, is this not an indicator that maybe we should pause things, at least GDP growth, if not banking security?
Well, it's kind of like having the flu, you know, and you're taking a flu medicine, or, you know, having some sort of cold or whatever. You don't like the side effects. And if we pause, you know, we can avoid perhaps a deep recession. I don't think we can avoid a slowdown now, because things are already starting to unwind. But then you don't get rid of inflation, which means you go through it again. That's exactly what happened in the 70s. They kept, you know, going after inflation in fits and starts. And what happens is it ratchets it up and ratchets it up. You know, there are companies that are building this into their expectations now, that they can raise prices every year. And Kimberly-Clark, the people that make Pampers, they've raised prices about 10%, 2 quarters in a row. And they just have figured out that women have to buy diapers. And so they're going to put it to them. McDonald's, Coca-Cola, Pepsi-Cola, they've been very aggressive about price increases. The folks that make essentials have figured out that this Federal Reserve will probably go along with it for a long time.
Thanks for watching. Go to newsnationnow.com to find NewsNation in your cable lineup. And don't forget to click the red subscribe button below to get more of NewsNation's fact-based, unbiased coverage.